Welcome to today's broadcast. My name is Colleen Patterson, and I'm the Director of Employer Services and Compliance at Savoy. I want to revisit a topic we discussed on Monday, which was about New Jersey Governor Murphy signing Executive Order 123. As we talked about, this required a minimum 60-day grace period for health and dental insurance policies, and also a minimum 90-day grace period for life insurance, insurance premium financing arrangements, and property and casualty insurance, which, as we talked about, included auto, homeowners, and renters insurance. What we also discussed is that the New Jersey Department of Banking and Insurance issued several bulletins regarding the executive order, outlining what insurers need to do in order to comply. The extended grace period applies to individual, small and large group fully insured health and dental insurance plans, including Medicare supplement plans. As we also discussed, self-insured plans are exempt as they are regulated by the federal government and not state law. So what's happening is carriers are beginning to respond to the order and are starting to release information. So definitely keep an eye out as we will continue to share the information as we receive it. However, what we're also getting is questions are starting to come in specifically regarding COBRA participants and whether or not the grace periods extend to these individuals. It's actually a great question. So New Jersey's Executive Order 123 and the subsequent DOBI bulletins that we're talking about only apply to the plan and plan administrator and does not require carriers to extend to COBRA qualified beneficiaries. The employer, as the plan sponsor, they certainly can choose to extend the deferred payment option to the COBRA beneficiaries. However, the employer is not required to do so. So it's really their choice. The next area that I want to touch on today is the individual market. We've previously talked about the individual market being an option to consider should an employee lose their group health plan coverage. The loss of coverage does create a special enrollment period, allowing the individual to apply for coverage as well as a subsidy, assuming they meet the criteria for subsidy eligibility. Well, what about individuals who were already enrolled in an off-exchange plan prior to the pandemic? What are their options? And if they have experienced a loss or change in income that's impacting their ability to pay their premium, is there anything that they can do? Well, as of now, neither the federal exchange nor the New York state-based exchange will accommodate a change in coverage for these members. And therefore, the member cannot switch to an exchange plan and try to qualify for a subsidy. Regulators are aware of the issue for off-exchange members and are considering options for a solution, albeit a time limit has not been given. We will continue to monitor if this changes, and if it does, we will share information as it becomes available. It's hard to believe that the first quarter of 2020 has come to a close. I don't even know where it went. Companies have started to release their first quarter earnings reports. One to note for today's discussion is United Health Group, which is the parent company of United Healthcare. United Health Group reported that both revenues and earnings from operations increased from prior year period, which it said reflects broad-based revenue growth in its Optum and United Healthcare units. So what's driving the revenue? United Healthcare, which, as I said, is an arm of the United Health Group, said revenue growth was driven by Medicare Advantage plans. Also important to note is they saw membership declines in its employer book of business, noting that it had 475,000 fewer members, which actually, considering the current environment, that's not necessarily surprising, but obviously they're seeing movement. This is only one insurer in this space reporting first quarter results. So as more reports are released, here's what you need to know about the topics we talked about today. Remember, nearly 10,000 Americans are turning 65 every single day. Even if they are still working, evaluating options in the current environment is more important now than ever. In one quarter, for one insurer, membership in the employer book of business is down. Some of these members are likely seeking alternatives to continuing group coverage through either COBRA or state continuation. So you have to evaluate options. So remember, if you are a group broker and need a source of expertise on individual, contact your Savoy account manager who will connect you with our individual team. If you are certified to sell individual policies on the FFM and appointed with carriers in your area, Savoy can provide you with a plan comparison and enrollment tool that you can use to help customers by phone. We will send you a link to your own version of the tool and a code so you can register. Attach your NPN and be in business with commissionable sales. And we can do this quickly. And if you have members over 64 years old, a transition to Medicare could be in their best interest now. A Savoy Medicare expert can help guide you and the member to the right coverage decision. Everyone can sample these tools at mysavoybenefits.com. By helping your groups and their employees survive and make informed decisions, you'll continue to cement your value during a time of uncertainty. Lastly, I wanted to touch on loans that are made through the Small Business Administration under the Payroll Protection Program. We're starting to hear of employers who have started to receive SBA approvals, so that's good news. Loans are expected to be funded within 10 days of getting SBA approvals. So we would imagine that we'll start hearing over the next several days to a week, these same employers are starting to receive the funding of the loan. So again, it was a slow start to that process, but good news to hear that movement is starting to occur. As we know, the funds under the PPP program are on a first come, first served basis. And Congress is already considering the addition of $250 billion to the program. And while leaders of both parties believe the new funding is necessary, they haven't reached an agreement yet. But we are going to continue to monitor the activity and we'll report any news as it happens. On a personal note, this past weekend I enjoyed some much needed downtime with my family and it was wonderful. While walking outside, I was looking at the flowers and trees, which are all starting to bloom, and suddenly it dawned on me that spring has already happened, and that was back on March 19th. Our world became so chaotic so quickly, I completely missed it. But here's the thought for today. Where flowers bloom, so does hope. Together, we're taking steps forward, and boy, does that feel good. We thank you for your encouragement and your continued partnership. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources that are available in the COVID-19 section of our website at savoyassociates.com. And from all of us here at Savoy, stay healthy and safe. Thank you for joining us today.